So today's topic is about first-time home buyer tax credit. And we have client calling and wondering what's going on and do I have the credit? So we want to put something together for you to understand how that kind of assistance are coming through in our government system. So obviously, every time we're looking at the governmental assistance, we're looking at the federal tax, we're looking at the federal level, the state level, and even the county and the city level, right? So, but today we are going to largely focus on the federal. And at the end of the webinar, and I'll give you one state, Minnesota, as an example, and how the first-time home buyer assistance are coming through. So with that said, let's share screen, folks, and we want to show you what we have in store for you. Right here, and you will see our website, communitycpa.com. And our website has these on the top line, you can see onboarding with us, you can see appointments, and you can see all of these functions we have in our firm. So once you become our client, and you would have the client portal, you have the payroll portal, and if you are not our client yet, you can come to the appointment and really looking for the partners to have appointment with. You can explore who we are, what we do, and you literally can book exploration session with the partner, and which is free of charge. Then you can learn what we can do for you. Then on the internet, there's a very useful place you can go as well to see us. That is our YouTube channel. And you can go to Community CPA YouTube channel to see all of these webinars we have done in the past. So first-time home buyer will be deposited here after this session. So you can come over here with the magnified glasses right here, and you can search. We have more than 1,000 videos in there. Every single video is about a piece of knowledge that you can bite on, you can learn. So that's our purpose, right? Sometimes our folks will ask us a question which really should be answered already, and we answered that so many times to other people. So now we put them on the internet, and we just simply tell our folks that go watch that video and you will be getting your answer. So please subscribe to our channel and also turn on the little bell so whenever we have a new webinar coming in, and you will be receiving the notification. And with that, let's just go straight into our topic today, first-time home buyer tax credit. So exciting, and you're thinking, oh yeah, I want to know that. I remember it was a lot of money. So let's talk about it. So this one page is about our firm history. And earlier, when you go onto our website, you actually can see our Houston building that under construction right now. And it is a building that we will be in there. It's in Houston, Galleria area. So I hope you find reasons to come to visit us. We have 5 branches so far, Houston being our first, our latest new one. And we also, I myself served on the National Taxpayer Advocacy Panel, which is the a federal advisory committee to IRS. A very good experience. I've been there for 3 years, and I also, I am the managing partner and CEO for Community CPA. So the level of knowledge, the credential that I have for myself, and marks where the firm's maturity is at. So I hope that give you a dose of confidence. Know who we are, what we can do. These 2 books are the books I wrote in 2019, and another one of them in 2023. I am writing the 3rd one, which is the 2 p.m. is expanding your business. So I had starting your business at 8 a.m. and grown your business at 10. And 2 p.m. you expand. 6 p.m. is the book that I'm yet to structure, and it is repurpose of your life. You don't have to do the same thing for so long, and at some point of time in life, not to retire, but to repurpose. All right. So that is so much about us, and the no responsibility disclaimer. You know what that means. Then let's go for it. There is a lot of misunderstanding related to the first-time home buyers credit, tax credit, because there was something going on back in 2008 to 2010. That was the first time around for this home buyer credit to come through. And I want to make sure that you know in 2008, 2010, this $7,500 coming in and to as a part of the tax credit. And unlike other credit, and this credit function like more like a non-interest loan to you, so you will pay it back with 15 equal installment starting from 2010. I'm sure some folks here had known about that. But that one was amended later in August of 2021, saying that, oh, you don't need to pay back. So it is actually this first time home buyer later on was amended to, sorry, I have a little trouble with my mouse. And later on was saying that, oh, you don't need to pay back. And, this is was changed. So back then, we have gone through some benefit for the first-time home buyers, and that was in the period if you bought a home from April 2008 through September 2010, and you were the first time buying home, you had that benefit. Now, in 2021, there is a new thing bubbling up, and the senators and the lawmakers, they introduced another first-time home buyer act. They call that Home Buyer Act 2021 because that was brought up in 2021. The bill says that the IRS would grant the first-time home buyer up to $15,000 in refundable federal tax credit. What that means, refundable means that you will get a $15,000 check back from IRS if you qualified as a first-time home buyer. And non-refundable means that if you pay $15,000 taxes, then your tax becomes zero. But refundable just means that they're going to give you a check. Of course, not everybody get 15,000, but some people will get, some will have a reduced amount. But that's the thing. They're saying that, okay, with inflation, by 2024, people should get 15,000. 2025, it will inflating 3%. Of course, it's more than 3%, but they're saying, oh, we give you $450 more. So that was in this proposal, okay, to cover your purchase, your first home, give you that cash out. But it is a bill that not yet being passed. There's a lot of bill was stocked at the House. And so, just like the border bill, the same thing. There's just so much going on, right? In the White House, but not in our house, in our personal house, no. But in White House, there's just a lot of drama. So with that said, the bill wasn't passed. So if the bill passed, it does say that first-time home buyer, and if you own home, if you did not own home for 3 years long, and when you buy home, you also qualify. So it's not exactly first. It is more like you cannot have your home for 3 years. And you must be the first time using the credit can be used only once. So if you had done in 2008, 2028, then later on you say, well, you had a bankruptcy, the home was taken away, but you already had it once, then you cannot get it again. So that was in the bill. And also they're saying that you cannot use this for second home or rental home. And it also says something about 160% of area median income. This is in the proposal, but once IRS implement those proposals into the tax form, it will actually give you the calculation. Right now, it is just a general rule saying that if your area median and is $100,000, like average AGI, then if you make $160,000 AGI, then you will not qualify for the home buyer. So basically what they're saying is that if you make too much money, you don't have home buyer credit, which is understandable, right? The first time home buyer can be as young as 18. Just, I know business owners' brain is cranking. Oh, I have a kid coming up, and my kid can buy his first home, and he can utilize his first-time home buyer tax credit. Yes, if it is past the bill, yes, you can do that. And just make sure that you are not having your kid buying your home, right? Because those are related transactions, and it has to be your kid are really buying a home, not from the relatives. Another act is also on the table, still as bill is not passed yet. That one is called Equity Act. What happened is that the federal government is saying that they will give $25,000 cash to eligible home buyers to offset closing costs, taxes, and interest. So how do they give is not yet so clear. It could be giving to the closing company, could be giving to the state, and the state administrate that pass through. And it could also be the taxpayer putting that on their tax return and then getting a refund. So however that works. So it is another big one. And if you get first time home buyer credit plus the 25,000 equity add-on, and then you're 40,000, right? So you literally could have $40,000 paid by the government and to buy your first home. And if you're qualified to be given the down payment called Equity Act, and I know that this down payment has a lot of restrictions to who the ethnic groups, disadvantaged groups, and also income limitations to that. So more details, you can find them on this link that I'm showing you here. Just kind of, if you Google on the internet, just say, where is the first time home buyer tax credit? It will link, it's almost immediately link you to this bill because it's not passed, it's on the table for the lawmaker to do. And I mean, the whole country are spending so much, wasting so much time on politics that is obviously should not even waste those times. But these first time home buyer things is more of um, helping the citizens here in United States and who cannot afford the home, and I guess it's not some party's priority, right? So now we know there is a bill, sound really good, but it's not coming in. Then what else do we have? Yeah, don't leave. And here is more. Even though that first time home buyer credit didn't come through and is still pending, and election is coming up soon. So once the election come through and the White House residents will have energy to push through this one or just completely eliminate that. And without saying which residents would endorse the bill, which one would eliminate that, right? So it is either there or not there for us. But these three things I listed here is there for you, regardless of who is the residents of the White House. And the mortgage interest you can deduct, right? And especially if part of your home is your business, you use that for business, that part of the mortgage interest and the property tax and it can be deducted as well in your business. And then your property tax can be listed on your Schedule A, mortgage interest on Schedule A, mortgage points on Schedule A. So those are the ones could make you go up or go higher than your standard deduction, then that become additional tax deduction for you, right? So don't forget that you always have it. Then I also want to mention to you 10 assistance program for home buyers that is available out there. And some of them are federal assistance, but already earmarked to the state. But when I go through this, you will understand. But at a minimum, when you buy your first home or when you buy a home and you want to ask those questions to the people who are doing your financing, because they are the one has the access to these. So number one, down payment program and grants. So this is the one that you can actually get. There is a place you go to, Department of Housing and Urban Development website, and you go to your state. There's a state-by-state directory for this down payment program and grants. So if you are a first-time buyer or you are in a disadvantaged area, or you're just not having enough money to put down payment, I would encourage you to go to Department of Housing and Urban Development and check your state and follow through, see whether there is any program like that for you. The second one is mortgage credit certificates. And this one reserved for low-income borrowers. Like if you go to the bank, you borrow money, you're low income, and you can get the mortgage credit certificates. And this mortgage credit certificates are the federal credit for up to $2,000 of paid mortgage interest. Remaining interest can be itemized, means that maybe you have to pay $3,000 interest, but $2,000 is paid by the MCC credit by your lender. The lender pays for you. Then the balance you can claim them on Schedule A, right? So that is something I want you to know as a tool in your pocket. Down payment assistance assistance loans. You may be eligible for a second mortgage to help offset your home down payment and closing cost. Okay, that second mortgage might come in from a low interest loan, a deferred payment or non-interest loan, or loan that is forgivable if you meet certain requirement like stay in your home for 5 years. So this is something you need to ask when you are getting into the loan situation. A lot of those monies from the federal government, they can't really give to you because they really are not in the business to decide. You are the one qualifies for it. But they give that money to the bank or to the state. So to let state qualifies you, or the agency who works for the state to qualifies you, sometimes the bank to qualifies you to get those kind of benefit. So really you just, as an end user, you don't need to know so you don't need to know how to get it done. What you need to know is those program that is available to you. So you literally just want to take a screenshot of the 10 assistance program here and just ask each question. Go to the lender, goes, do you have a down payment program grants available to my kind of loan? So they may say, yeah, we do, but you make too much money. So that could be something they tell you. So this is number 3. And the number, sorry, this should be 4. So number 4 is the Good Neighbor Next Door program available through HUD. Okay, that's a federal agency as well. So then, you know that HUD statement, right? So those are the organization, the agent that managing those mortgages and the closing. So they have these program under their belt. So if you work through your closing company, and they would be able to tap into it if you just ask. And the Indian Home Loan Guarantee Program, this is more for the American Indian, Alaska Native families, right? This is more specialty. Conventional loan with a low down payment. Some conventional mortgage, but folks ask me, oh, Ying, what do you mean by conventional mortgage? And what do you mean by other mortgage? Conventional mortgage and typically are done by the bank that you deal with. For example, you work with a local small bank, and they generally speaking can loan money to you two different ways. One way is using their own capital to loan you. So they often refer that as a conventional loan. But the other things is that they organize with federal programs, SBA, and other agencies to get a discount or to get some help from the government in order to loan you. So those are conventional loans are largely handled by the banks themselves, so they actually can sell their conventional loans to other agencies, so they don't manage your mortgage. They actually just do it for you. Then they can turn around, sell, and make some money out of that. So that one with a low down payment is only requires 3% because they have this what we call the Fannie Mae's home ready loan backup. So I want you to, you don't have to know how they play in the background, but I just want you to know that there is a 3% down payment, a low down payment program, and see whether you would qualify. Not everyone qualifies, but if you don't ask, maybe they would not think about it, right? So the USDA loan, USDA loan is typically made available to individual qualifies, lives in a rural area and require no down payment. We're talking about home loan, okay? So USDA loan, no down payment if you live in the rural area. So you should be tapping into those kind of resources, right? VA loan, same. And these no down payment loans are available to active members of U.S. military veterans, and widowers of military veterans. So anybody related to military for homes, and it's spelled out really clear who would qualify. The Federal Housing Administration also have a loan called FHA loans, and this loan only requires 3.5% of down payment, which is less than what typically required by conventional mortgage lender. And last but not the least, an IRA early withdrawal penalty exemption. So normally you can't withdraw your IRA if you are younger than 59.5 years old, right? You're not reaching 60 and forget about it, getting it out without penalty, you normally would pay penalty. But if this 10% penalty will be waived, and if the first-time home buyer making withdrawal up to 10,000 towards to the home price, home purchase. So up to 10,000. So don't do more than 10,000. But that 10,000 withdrawal because you're purchasing your first home, then the penalty of $1,000 is waived. So that is what I want you to see in terms of the 9 points, right? Yes, the federal home buyer credit didn't come through. It would be nice if it is coming through because our folks would have $40,000 from the government, but it is not there. But we have these assistance programs. We talked about 10 of them that you should tap into, right? So this is the one from 7, 8, 9, 10. And then these are the one is actually 4, 5, 6. This is 4, 5, 6. Then you have 1, 2, 3. Okay, also just 10 of them. All right, so with that, I kind of give you an idea of how the home helps are coming through, right? So the first-time home credit is not there. That's okay, we understood. But you can pick up the phone, call your congresswoman, man, call your senator, and to urge them to pass that bill, to put it on the table to vote, and it's not being pushed out. Then Congress cannot take action, make it into law if these men and women are just not doing what we want them to do out there, right? So with that said, I say that it is something you can make it happen by calling them, tell them that how much that is needed. And so hopefully the federal will make that into a law. And beside of that, then you have these 10 assistance program that I talked about that you can use. And of course, you can always deduct your mortgage interest and your property tax and your mortgage points out of your Schedule A. So with that said, it gives you a understanding if you buy homes, what does that mean, right? Now, I want to use Minnesota as example because there is for the state, there is two programs worth mentioning. Minnesota Housing Monthly Payment Loan. Minnesota Housing's monthly payment loan program offers a first-time home buyer in the state up to $18,000 for a down payment or closing cost. You must qualify for the startup or another Minnesota housing loan and contribute at least 1,000 of your own money to purchase the house. And so you see, they have that one there for you. And the monthly payment loan term is 10 years to be paid back in the monthly installment at the same interest rate as the one on your first mortgage. So if your first mortgage is 6%, so they're doing 6%. But what happened is your 18,000 is not going to be counted by the banker to be the loan you are doing. So basically, if you are going to have to borrow 118,000, then your 18,000 can come out of the housing monthly payment loan instead of the bank finance that 18,000, right? And the Minnesota Housing Deferred Payment Loan is another one for first-time home buyer in Minnesota can also obtain down payment assistance through the deferred payment or deferred payment plus loan. And I want you to hear the last word of the sentence. It's a loan, so it's not a grant. And the loan typically means that you need to pay it back, right? It could be interest-free loan, but it's still you need to pay it back. But if it is grant and you don't need to pay it back, it is given to you. You might have to report as a taxable income though, because it is a grant, but you don't need to pay back. And the deferred payment option offers up to 16,500 for a down payment or closing cost, where the deferred payment plus option can go up to 18,000 and you will repay the funds in a lump sum when you pay off the first mortgage or sell the home or move. Man, if you're just gonna be stabilized, stay in that house for 20 years, then your 18,000 don't even need to pay to be paid, right? Do we really live in the place for 20 years? I'm trying to think for myself. Yeah, I actually, we two houses I lived there for more than 10 years, so it's pretty long time, right? So house is still that way. When we buy house, we tend to stay there for longer. So that just means you pay it later. So with that said, I think that wraps up what the core information we want to share today. And we want you to know that the first time home buyer tax credit is pending in the Congress. It is not becoming the law yet, even though it was hotly discussed by the public, and but it is a bill that's not being made into law yet. But other than that, we shared about 10 uh, home purchase assistance program that you should tap into. And we also talked about what you should do anyway, like property tax deduction, mortgage interest, and then mortgage point. All of these ones, you should do it anyway, right? So don't forget that. And then I want to give you our last two slides. If you desire to know more, here you have the partners information from our website. Remember I showed you earlier, and you can tap into us and have a video conference with us. We are so comfortable with doing these kind of knowledge exchange online because this is not new. We have been doing this forever, so folks knows what to look into, and everyone, we have such a good feedback in terms of our in terms of what we are able to resolve. And then our last slides here. Ah, here is our contact information. Know that like even today's webinar is actually coming from one of our clients. And so he's asking, I knew other than him asking, there's other people also ask about the first time home buyer's credit. So that prompted us to prepare today and to share with you on this knowledge. You can always email Catherine at communitycpa.com, and she will be the one that making sure the content is relevant and we can answer the real-time question rather than doing anything outdated, right? And our phone number is right there, 515-288-3188. We open 6 days a week, folks, Monday to Saturday. Like today, we are open. And when you call our phone number, and we actually answer your call because we have real people in a real office. We're not virtual. And our office hours is from 8:30 to 5:30. I will talk to you again on Tuesday. That is my time, Tuesday, 3 p.m. and Saturday, 3 p.m. And I appreciate you are here with me today and share our knowledge. Send our link to your friend so have more people learning what they should learn. Talk to you again. Bye-bye.